Hello everyone, this is Savji Chatterjee recording our weekly session for Chartsarefun. This is for the week of September 22nd, recording this on the September 28th in the morning on Sunday. Well, today we're going to keep it very specific to some warning signs that we are seeing in the market. Near term, there seems to be upside. There is a melt up going on. We know that there's tremendous momentum in quantum stocks, momentum in AI stocks for sure. That's what drove the whole rally since 2022 bottom. And then there is, the nuclear stocks. AI kind of goes hand in hand with huge needs for energy. We know that the current utility infrastructure in place is not able to meet a lot of the demand. We know that that's big in the news has been the build out of the Stargate, the one that Oracle, OpenAI, and Masayoshi Son from Japan are leading. We know that there is a huge build out of AI data centers in Texas, and a lot of that will need tremendous amount of energy. So, and then there's been NVIDIA's continuous investments, right? They invested about $5 billion in Intel, then they invested $100 billion in OpenAI. They are continuing the momentum. They want to invest so that the continued need for GPUs and for the AI build out is supported. There shouldn't be any capital issues. OpenAI, as we know, is a startup bleeding money, building out, but then bleeding money. They don't have as much, they're not profitable, so they don't have as much capital to build out these huge infrastructures. So whenever they raise capital, there's huge demand and investors jump in. But NVIDIA seeing more from their vested interest to see GPUs grow and kind of expand, invested 100 billion. So yes, their AI melt up, call it the entire market move since 2022 bottom is AI related. But recently, this year, 2025, a lot of things are kind of similar to what we saw back in 2021. After that sharp V-shaped rise that we saw in 2022 from the COVID low, going into 21 till we started the correction in 22, there was some speculative kinds of bubbles that shaped up. GameStop, for example, is a meme stock, shot up just for tweets about the company and how they plan to invest their capital, raising capital, converting the cash back. And more recently, Ryan Cohen, their CEO, has been investing that cash in their balance sheet into crypto. So this year, 2025, there's a big speculative thing going on with crypto treasuries. Started off with MicroStrategy's idea for the last couple of years, investing heavily into Bitcoin. But now, the last few months, the biggest thing in the news is Ethereum is now having a tremendous melt up opportunity. Folks believe that it can quickly run up to 9,000. And as a result, um, there's been companies with big pocketed, deep pocketed investors investing on to shoot them higher. In particular, Bitmine is something that Tom Lee has been driving higher. It's a Ethereum treasury company, and then there is SharpLink Gaming, run by the co-founder of Ethereum, also kind of driving it hugely, hugely higher. So, jumping straight into our blog site, it's chartsarefun.substack.com. We appreciate you subscribing to it. You'd be getting an email as soon as the blog goes out. Our YouTube site is also Charts Are Fun. Appreciate you subscribing to the channel. And then if you like the videos, we appreciate you hitting the like button. And let's start off with the 2 hour chart of QQQ, the NASDAQ 100 ETF. This, what we're showing here is a beautiful cup and handle from that early part of August. Left brim of the cup around 582.64, coming down to the rounded shape bottom of the cup at 558, tested twice. And then from there up to the right brim at 583. So if you take the low of the cup at 558.19 and the top of the cup at 583.09, that's roughly $25, 10 cents off from 19 to 9 cents. So that's roughly $24.90. At $24.90 to 583.09, that gets us very close to 608, 608. So 607.99 is exactly what that target measures. So 608 is where this hourly, 2 hourly chart of QQQ is pointing us. We know that from testing closer to 603, we pull back. Last week we had got that pullback towards that 589 level. And from there, last couple of days, it has rebounded higher towards the 595. We have to see. Potentially the possibility is very much there, looking at the big move higher from 583 and with this cup and handle, that potentially we could hit a higher high. There is stimulus in terms of a catalyst that can the market is waiting on is the resolution on the government shutdown. The government shutdown's deadline is this Tuesday, which is September 30th. And if things are not resolved in Congress between the Democrats and the Republicans, we could see a shutdown starting October 1st. But if that's averted, senior leaders of the Senate and Congress are meeting President Trump on Monday morning, trying to negotiate a deal. But if anything happens, we could see a deeper pullback. In that case, 583 will now be a strong support. So if we do get a bit of pullback, it could perhaps test 583 and then maybe make another attempt. But if that resolution happens and there is no shutdown, that could be the catalyst and the market could climb back to 608's target. So that's a possibility. If you look at a little longer term chart of QQQ, the melt up target is actually a lot higher. This is looking at the February peak of QQQ right before it broke down. That peak started off from 538 in QQQ. It came down very drastically towards bottom of the cup at 401, came back up towards 535, 536, and then a shallow handle with a gap. When you have a gap breakout and the gap is yet to be filled, that's a very bullish, extremely bullish signal. So this breakout on this cup and handle with a gap left and then since then climbing higher highs points to a target. So if you take 401 towards 535, that's roughly 134 points. Add that to 535, 669, 670 is where that target is. So that's where the melt up target of QQQ is pointing to, which means though we may get a move up towards the 608 target on this 2 hour chart that we talked about, we might get a pullback from there, but eventually by later this year into beginning of next year, we could have a continued melt up climb in the market towards 670. We're going to talk about, by the way, in 2021 into 22, while the market kept climbing higher highs, there are certain internals of the market that were pointing some form of a topping, ominous topping signals. We're going to talk about that. We're going to come first. I want to show you the bullish part of the picture. So the 2 hour chart of QQQ potentially shows some upside to 608. Maybe we get a pullback from there to retest this 583, which will now become key support, and then the resumed climb. And the climb can then climb up as high as 670 is potentially where we think that melt up target on QQQ could be. A similar kind of a melt up target on S&P 500 is also there. Here the February peak from where S&P came down was at 61.47. It came down to 48.35, then came back higher towards the 6100 level. If you just point the slider and put it right here, you can see that the high in this case was 6045, 6059. So 6059 from 48.35, you're talking about 1224 points. At the 1224 points to 6059, you get 7283. So that's the melt up target of S&P 500. And we are currently hovering around 6643. So from 6643 to 7283, you're talking about 640 points or so. So 640 points from 6643 is little less than 10% is further upside is expected in S&P on this melt up number. So those are the bullish things for the market. Now we're going to look at some potential warning signs. Bitcoin has had a sharp drop since the two peaks that it tested around 122 and 124 in July and August. It had come down all the way to 107,000 late August into early September, tested it twice, and then started moving higher. But it failed at key resistance level at that 117, 118 level. and then last week has sharply dropped from 118 all the way towards the retest of the 107 at 107,000, coming closer to the 108,000 level. The 4 hour chart, this every candle here is 4 hours. Bitcoin, we know, trades 24/7. So in this case, it's constantly trading over the weekend, over nights, all around 24/7 it's trading. This measured like pattern that you see here, when you start seeing lower lows in Bitcoin's price but higher lows in RSI, that's called positive divergence. It's RSI's relative strength index. Higher lows indicate bullish positive divergence. And potentially the 4 hour chart could indicate that perhaps Bitcoin may not break down below 107. We might get a reversal from here. And the key is for it to be able to take out these moving averages. We can see that the 200 and the 50 period moving averages are declining. So for this now to reverse the trend, it has to break this and go above it. So which is at 112,500. So that level is what we need to be watching and see, can it break higher? Things below the 200 average day moving averages are never good. And then there's a adage in Wall Street that things are never good when a stock market or a stock is below its 200-day moving average. So in this case, Bitcoin's 4 hour chart shows it below its 200 period moving average. That's never a good sign. So we'll see if it's able to reclaim that 112,000. And in that case, we can see if it can climb further. Now, if you take a longer horizon on Bitcoin and point out a weekly chart, every candle here is a week of trading, and this goes back towards 2021 when we saw a peak around 69,000. From the 2000 peak of 69,000, we saw a sharp drop to 15,500 in that late 2022 when the overall market had bottomed. Then a move back higher towards the 73,800. So here the right brim is higher than the left brim. That's a bullish sign. Whenever you have a cup where the right brim is higher than the left, that's usually a bullish sign. Then a handle pullback. This measured target from 15,500 to 73,800. We are talking about 58,300 is the depth of the cup. At 58,300 to the 73,800, that's 132,100. Was it able to meet the target? Not quite. So as Bitcoin climbed, it broke out. You can see that this is the breakout from the handle, strong volume in the breakout. All that is bullish. RSI also climbed and had a very strong move. However, as it then climbed over the next several months, it formed what we call as a bearish rising wedge. A bearish rising wedge is drawn by joining the highs and joining the lows of the climb. So if you join a trend line through the highs and you join a trend line through the lows, that converges towards an apex. And then if it breaks below, that's usually a warning sign. Now, yes, it did break from that. Yes, the other part is the RSI had negative divergence. As Bitcoin climbed along this wedge, RSI printed lower highs. MACD printed lower highs. These two are negative divergence indicators that were bearish signs indicating that this was a bearish wedge breakdown. That said, when this breakdown happened right here, right, we saw that right around the August timeframe. Look at volume. Volume was not a spike. We did not see a spike, as in there was not active selling on that bearish wedge breakdown. So that's what we got to watch. Is this a false signal? If that's a false signal, then perhaps we could retest 107,000 twice and then break out higher. And in that case, the target that this cup and handle measures to 132,000 is definitely next in the cards for Bitcoin to climb towards. But if this breakdown does happen below 107,000 that we are watching, 107 to 124,000 is 17,000. 17,000 subtracted from 107 takes us back to 90,000. Typically, bearish wedges, by the way, come back and end where the wedge started from, which in this case was 74,000 low around April of 2025. So potentially this could collapse all the way down to 74,000. But if this is a false signal, this bearish wedge resolves higher, then the move of that is from this cup and handle on shown in blue towards the 132,000 is what we are expecting. There are bulls of Bitcoin who actually expect even a higher target, and that higher target is measured from the cup and handle on the shorter term time frame. On the 2025 timeframe, 109,000 to 74,000 to 112,000. That's a cup, then a handle, a breakout. So 74 to 112. If you look at that target, that's about 38,000. Add to 112, that's 150,000. So the bulls are looking for a 150 target for Bitcoin, while a longer term view on this cup and handle in blue measures to 132. So 132, 150 are upsides on Bitcoin that bulls are looking for. But on the bearish side, if this is a bearish wedge breakdown, then breakdown all the way towards 76, especially breaking below 107 would be a bearish sign. That would result to a lot lower targets for Bitcoin. Now, we want to show three key indicators that are repeating what they kind of did back in 2022 from 2021. And what we are questioning here is, are we setting up? That's the theme of today's session. Are we setting up for a cyclical bearish move lower in the market in 2026 like we did in 2022? So here, let's look at VIX. VIX, as we can see, since 2024, been climbing higher lows. So we had seen VIX levels at the 11.5, went to the 12.7, and in spite of the markets melt up, it does not seem to go below 14. It's 14.12 was the lowest target in VIX so far. So higher lows in VIX, and while the higher lows are being printing, look at this is the percent price oscillator. How far away is it from its 200 period moving average, which in this case is the one in red. And we can see that it has basically not been going lower low as the price or as VIX is printing higher highs. So this is a positive divergence on this indicator, positive divergence here, and MACD histogram above all is getting ready for a bullish cross. When a MACD histogram comes from below the zero center line and goes above the zero center line, and the signal line in black goes above the red line, the moving average line, that's an indication of a breakout in the price, which in this case of VIX, a breakout higher in VIX is bad for the market. A higher volatility indicates potentially a market pullback. So this is an ominous sign in VIX. We can see that this kind of moving average, and the other thing is the short-term 50 period moving average is hugging the 200 right now, but this possibility is this could now break higher and move higher like we saw in 2022 where the 50 period went above the 200, and we saw that the trend there was also higher lows in VIX as it climbed as the market fell down. So that's something we need to watch, and potentially if that happens as VIX climbs higher lows, higher highs, potentially that could indicate a repeat of 2022 in 2026. Another indicator which technicians use for the bullish strength in the market is called the bullish percent index. This is measured by look at the 500 stocks of S&P 500. What percent of the stocks are showing bullish signs in their point and figure? Point and figure is a technical analysis chart drawing pattern like you show with candlesticks. Here we're showing candlesticks, but point and figure is another approach that technicians use. So in the point and figure charts, if the percent of stocks are going higher in a bullish pattern, that's bullish for the market. And so that's what happened. From the 2025 low, that percent fell all the way down to 10%, as in only out of the 500 stocks, only 50 stocks had bullish patterns in them. All 450 were bearish. So that 10 shot up towards 76.4. Since then, we are printing lower lows, as we can see, and lower highs. That, along with the fact that now the 50 period moving average on this bullish percent index is getting ready for a death cross, as in going below the 200 period. The 200 period is declining, which validates the fact that this bearish cross could mean lower lows coming, is a pattern that we have seen in 2021 into 2022. That bullish percent, as the market fell, kept printing lower lows. Are we setting up for something similar? We've seen 65 back in June timeframe. Then we saw 54, a lower low back in early August timeframe. And now if we go lower, Lower lows in this would indicate a market pullback as the bullish percent of S&P 500 keeps weakening. So that's a ominous sign. This is indicating potentially a market correction ahead, where the bullish percent of stocks in the S&P 500 that have bullish signals are going to keep deteriorating. So that's something for us to watch. And finally, nothing good happens, when the stock moves below its 200 period moving average. This is another technical indicator, is the percent of stocks above. A means above the 200 period moving average. So in this case, look at the dome shaped topping pattern on this SPX A200R, as in percent of S&P 500 stocks that are above its 200-day moving average. What is this telling us? This is telling us that we are, as the market is moving up from its 2022 bottom, the dome shape is overall saying that now we have come to a point where cyclically time for a pullback, because the dome shape percent of stocks above the 200 moving average is weakening. The peaked in 2024 at 86, climbed, right? Higher highs from 54 to 77 towards 86. And since then, it's been printing lower highs, 86, 83, and the most recent high where it topped out is 71 that we saw in, again, the early August timeframe, and now that's deteriorating. Look at the death cross here. The 50 period in blue is getting to cross below the 200 period in red. So this death cross, this MACD histogram is also showing a bearish crossover. The MACD histogram in blue here is getting ready to cross below the zero center line. So that indicates that this percent of S&P 500 stocks that are currently at about, say, 63% of the stocks are above the 200-day moving average. That had fallen as low as 15 in April's trade war low. So if that goes back, and it was around 10, 12 and 10 in 2022 bottom. So if this falls, this indicates there are fewer and fewer stocks above the 200-day moving average, as in, on the contrary, there are more and more stocks below their 200-day moving average, as in they're more bearish in their trend patterns. So this is another thing that we're watching as an early signal, like what happened in 2021 into 2022. So look at how sharply the percent of stocks above the 200-day moving average dropped. Lower lows got printed all the way as the market fell off. Here we are now getting ready with this death cross on the 50 below the 200, and then the MACD's bearish cross for lower lows to be printed over the next several months, indicating the market could essentially have a bearish cyclical move into next year. Can't rule that out. So a repeat of 2022 from what happened in 2020. So what happened in 2022, a repeat of that in 2026 is basically the theme of today's recording. These are some signals that we're watching. The S&P percent of S&P stocks above the 200-day moving average is weakening. Percent of stocks that have bullish charts on the bullish point and figure charts, this is called the bullish percent index, is also getting ready to weaken, like we saw in 2021 into 2022. VIX is getting ready for a sharp climb higher. The MACD bullish cross here means VIX could see higher highs. So we've already seen higher lows, 11.5 in 2024, late 2024, December around 12.7, and most recently at 14.12. So that at the end puts us the question, where do we think the market could go in the next few months? There is a possibility, as we're seeing in the Bitcoin, if this does not break down, if it does break down, that's another ominous sign corroborating with that Bitcoin has already topped out. That kind of looks quite scary, that if Bitcoin is already topped out, it could mean that it could revert back towards that 73.8 or 74,000 level from which it broke out. And that break, if we measure from 107, 124, 17,000 to 90, so we can get a pullback to 90 and then from there a break. And 90 is actually below the 50 period. Look also how far the 50 period has diverged from the 200. That's also of kind of a warning signal that the market is extremely overbought, how far it has deviated from its 50 to the 200 period moving average. Look at that gap between these two moving averages on its weekly chart. So that is an ominous sign if the break down below 107 happens for the crypto bulls. And near term, though, there is a potential, uh, positive divergence with higher lows in RSI in the 4-hour chart of Bitcoin. So we are watching that carefully. It has not tested the late August, early September low at 107. The recent low was 108,700. Over the weekend, it has been pretty quiet. We can see a very tight range in Bitcoin. So tomorrow, Monday, any positive news that kind of reverts it higher would be bullish for the crypto bulls, and they would expect a savior here to not break below 107, and from here move back to reclaim that 112,000, then up to the next level at 113,500, all the way back to retesting of 117, 118 is what the bulls would be looking for. And near term QQQ's hourly chart, 2 hourly chart in this case, shows us a cup and handle with a 608 target. We know that we did get a pullback last week from 603 or 602 towards a 589. It kind of successfully tested it, moving back higher, closed near 595, 596. A move back to 608 to meet that cup and handle on the 2 hourly chart is definitely a possibility to if the resolution on the shutdown is positive and we do not shut down on October 1st. The longer term chart, in this case from a 2 hourly now to a daily chart, this is a cup and handle with a gap and a breakout of climbing higher highs. That's a melt up target. So that cup and handle measures all the way up to 670. We are near 595. You're talking about $75 of upside, which is, a decent 12% further higher for the market, taking it to those levels is what 12 to 13% is what we should be looking at for further upside on that melt up. Similar kind of melt up on S&P 500. It's got its cup and handle with a gap like the QQQ, and since then climbing higher highs. That measures to a melt up of 72.83. We are currently near 66.43. That's $640 of upside. $640 out of 66.43 is a little less than 10%. So that potential upside on S&P can't be ruled out if it continues to climb higher highs. So with that, good luck investing. We'll talk to you next week. Thank you.